Here on the TD Ameritrade Network, let's bring in our next guest for our cash tag segment, and that's going to be Landon Swan, co-founder of LikeFolio. Welcome back to the show, Landon.
Thank you. Good to be here. Happy Monday.
Happy Monday to you. So we're talking CarMax. The stock's down, as I mentioned, about 34% from year-ago levels, and it just seems like there's fits and starts in this particular segment. As far as used cars goes, prices are starting to come down after ramping up throughout 2021 and 2022. Starting to see that dip there. Demand starting to wane here a little bit. What kind of data are you guys seeing out of LikeFolio?
Sure. We're actually seeing in February, used car prices went up about 4%. So it had been going down from the highs, and now it's starting to go up just a little bit, reverse that trend. But yeah, you're right. Demand is definitely down across the board. I think a lot of it has to do with interest rates. I mean, if you look at a new car loan, the average rate is 6%. On a used car, it's anywhere from 8 to 10%, depending on your credit. And that's, that makes your payments really high, and that's going to cause used car demand to sort of go down. Obviously, we're looking at about a negative 17% year over year on just the general industry right now, and a lot of it has to do with either supply within the landscape of all the other companies. And actually, when you take a look at the scatter plot here, you've got CarMax, KMX kind of in the middle there, beating Carvana on purchase intent, beating Carvana on happiness, destroying Vroom on both. Vroom is not where you want to be, bottom left. We threw AutoNation in there because even though they're not pure used cars, they do compete with CarMax, and they're actually doing really well. They're showing everyone kind of how this business should be ran. So I would say of all of those, that's the one we're most bullish on. We actually just put out an alert on that company, a bullish alert, a couple months ago. So we definitely like AutoNation. But sticking to the CarMax question, one of the things that we've actually seen is a very strong move in happiness. So you can see now that they're a little bit higher than Carvana. If you would go back a year ago or so, they're actually lower. Let me, real quick, I'll talk about this chart, the purchase intent chart. So you can see, it had a nice boom, I guess, in the middle of 2021. That's when used car prices went up because everybody wanted one. It's fallen off since, getting a little bit of a bump back. We're seeing purchase intent off about 19% on a year-over-year basis. That's on the social data side. On the web data side, we're seeing it almost the opposite, like plus 19% on a year-over-year basis. So we're seeing more visits to the website, more people on page views. That's up as well, and that has a very high correlation to revenue. So we're getting a little bit of conflicting data there between social and web. And when we look at happiness, which is one of the things that we are, we would love to put high priority on happiness on the long term. CarMax was below Carvana by about 8 points, and now they're above Carvana by about 2. Both companies have moved 5 points. CarMax going up and Carvana going down. And a lot of people are talking about how they like that no haggle pricing. You go to CarMax, it's got a number on the window. That's what you pay. You try to haggle with them and they say, nope, we don't do that here. And a lot of people really like that. It's just a lower stress environment. So the market's already pricing in, I think, about a negative 12% same store sales number. So, we think that with the stock being down a little bit, the expectation's pretty low. We've got some conflicting data, but overall, the data that we're seeing is actually leaning a little bit towards the bullish side. We've got a score of plus 36 on them, so we're comfortable making a bullish bet to the upside going into earnings on this one.
Landon, the used car business is confusing on many levels, right? Think about this. They had the greatest market ever, where there was no new cars coming out, and they didn't do well during that period. I don't know how you mess that up when you have the greatest financial setup in the history of making cars. How does a used car company not do well? And then, if you think about it, maybe it was the volatility of some of those numbers. So maybe the fact that the car market, maybe CarMax, what they need is just a normal car market, with no disruptions, with smooth pricing, where there's no pricing disparities. Maybe that's what they need, what the overall car market is getting back to. Maybe that favors them. I can't help but notice they had a huge miss a quarter ago in terms of their earnings, and the stock skyrocketed after going down. It rallied hard off that number. So maybe calm is what this company wants, not the craziness, which I thought would be incredibly profitable for them. Turns out it wasn't. Maybe they're looking for calm. Landon?
Yeah, if you think about it, I mean, company like CarMax, they make their money on the spread, right? The bid-ask spread. They're buying lower, they're selling higher. And if everything is nice and steady, then you're going to have a really easy time making money on that spread. But if it's volatile, and again, this is sort of Monday morning quarterbacking, because I agree. At the time, I was like, oh my God, CarMax is going to kill it right now. All the used car prices are up 20, 30%. How could they miss? But they're also paying 20 or 30% more for their inventory. And then if prices come down, they're upside down just like everybody else. So, a Monday morning quarterback would say they should have liquidated inventory in the winter of 2021 and early 2022 and just had 0 cars on the lot and then built it back up now. That would have been ideal, I think. But of course, they're not going to do that. It was so volatile that they were forced into a position where they had to buy a little bit higher. And if prices came down, they were on the wrong side of things. So I think during the early parts, they crushed it because they were selling at such a high markup. But then towards the later parts, I think, got upside down because they had to buy at the higher prices. So, I agree. I would have thought that would have been just gold mine for them. Didn't work out. But I definitely agree that the more steady things are, the better they're going to do, because it's very, very easy to predict and make that bid-ask spread.
Yeah, and I've noticed on the one that you mentioned, over the last maybe quarter or so, we're starting to see a trend higher in there above the stock price. So you're getting that divergence. But when you compare the competitors that came out in this space, especially at the start of the pandemic, Landon, when you look at the Carvanas and the Vrooms, who's to say that they're going to remain solvent at this point? They might not, because they've got a lot of debt on their balance sheets. They can come out of this, but at the same time, when you see that competitors in there, did that cause part of the problem also, because everybody was looking for a car, whether it was new, which there weren't a lot being made, and or used?
Yeah, absolutely. I mean, CarMax was competing with everybody, including their competition, to get the good cars at a good price, because as volatility increased, I think the spread likely increased as well. So they were probably, getting a little greedy, thinking, hey, we can make some real money here. But so was Carvana, so was Vroom, so was everybody. So it made it very difficult. And I think it's kind of a once in a lifetime event where used car prices go up that much, and you're paying over the initial price on a lot of these. And so I think it just was very difficult for them to navigate, and everybody was trying to do it at the same time. And the more aggressive players pushed the prices a little bit higher, and people that wanted cars pushed the prices a little bit higher. And it just wasn't as easy as I would have thought, Kevin would have thought, maybe you too, Tom.
Yeah.
And if we were in that position, we probably would have screwed it up too. I'm not saying I'm smarter than CarMax. I'm just saying it. In hindsight, it looks like it would have been an easy thing to do. But with all the competition, especially some of these companies like you're talking about that maybe are so aggressive that they're on the wrong side of things, and they might not be in business in a year or two. If your competition is that aggressive to where they may become insolvent based on their decisions, then it puts you in a tough position to keep up with them.
Right, definitely. In that competition has heated up. All right, great stuff as always, Landon. Appreciate it.
Thanks, guys.
That's Landon Swan, co-founder of LikeFolio, breaking down the data for us.